what's been among the hottest groups this year? The utility stocks. With the Federal Reserve seemingly on hold for the moment, these slow and steady companies with their gigantic dividend yields are looking a whole lot more attractive versus the bond market competition. How long can that last? Let's consider the case of Entergy, ETR. It's a southern utility with a 4.3% yield and a stock that's up more than 15% for 2016. Now, Entergy is an interesting story, one that we learned more about at the company's Analyst Day yesterday. At the moment, this is a kind of a hybrid. It's down south in Louisiana, Arkansas, Mississippi, and Texas. It's a generation, transmission, and distribution utility, 2.8 million customers. But Entergy also has a pure-play power generation division up north, including a bunch of nuclear plants, and it's this commodity-sensitive power generation business that the company's trying to transition away from. It's taken a long time. Now, let's be clear. The moment the Fed gets more sanguine about the economy, decides to raise interest rates, the whole utility cohort is probably going to get slammed. But as long as rate hikes are on hold, and that could be for a long time, this group can continue to outperform. Like how Entergy's given us a more than 11% return, including dividends. You have to do that since we last spoke to the CEO roughly 13 months ago. S&P is basically flat over that period. So let's check in with Leo Denault. He's the chairman and CEO of Entergy. Get a better sense of how this company's doing and where it's headed. Mr. Denault, welcome back to Mad Money. Good to see you.
Good to see you.
This is one of the few executives that I admit I pay. Well, I'm sorry, I paid my daughter's utility bill because she's one of your customers. Explain to our viewers why it's so important to transition to a pure-play utility with all that regulation.
Well, effectively, the utility business versus the merchant business are two different commercial operations. And the merchant business is subjected to a lot of volatility. Gas prices drive the marginal price in all of the markets that we sit, and gas is a very, very volatile commodity. So our investor base, if you're thinking utilities and you're thinking steady, predictable growth with a high dividend yield, et cetera, that just really doesn't match with the commercial realities of a merchant, highly volatile, almost like marketing and trading.
Well, but the thing I didn't understand when I look at a lot of the plants that are in the merchant, I mean, you have a lot of nuclear. Isn't nuclear the cheapest and the best?
On a marginal cost basis, nuclear is very, very cheap. What we've seen is with the really lower natural gas prices that drive those markets because of all the shale that's going on, that's suppressed prices. And then also the market design in the competitive markets in New York and New England doesn't really compensate nuclear plants for the attributes they bring. Their carbon emissions, that there aren't any, no SOx, no NOx, no CO2. They don't pay for the reliability or the fuel on site. Other technologies are subsidized to provide those. And so that actually further suppresses the price that the nuclear plants get.
Well, I mean, it's also, I mean, I know that all the scientists that I deal with and all the people who are truly environmental, who are scientists, all say nuclear is the best. But no one's protesting your coal plants.
We have very little coal, very little coal in the South. And you know, while they do have their detractors, they've been very, very reliable for us. All of the above is what we need, obviously, in the country. And there's a lot of natural gas being built. We're building a lot of gas ourselves in the South.
Now, when I look at your region, I mean, it's kind of a growth region, but you've not been able to raise the dividend as fast as others. Is that, again, because of the merchant problem?
It had a lot to do with the merchant plants, and then also we've been growing the business significantly over the last couple of years. We got to the point where last year we raised the dividend for the first time in 5 years. Our expectation and our objective is that we'll be able to continue to do that type of dividend raise into the future. Because the utility business that supports that, now we don't pay anything out of the merchant business towards the dividend, is going to grow at about 5 to 7% a year through the end of the decade.
2 years ago, I would have said you're the fastest growing area of the country. With oil coming down, is it kind of split because you still have a lot of buildings being built because of natural gas?
Well, we have a lot because of energy in general being low. A lot of our customers like that. So the oil patch is not a real big electric user. LNG export terminals are still being constructed, big electric users. We have steel mills in Arkansas under construction, big electric users. Sasol's building an ethane cracker in South Louisiana, big user of electricity. So we still have all of that growth continuing. There's been some delays, normal project delays. These are $10 billion projects.
These are the biggest projects right now, other than the Apple building. These are the biggest projects in the country that are being built for you.
Correct. So we still see a significant amount of industrial sales growth. And we have a system that we need to modernize. Some of our plants are 50+ years old. New technologies have been ever increasing in terms of the efficiencies. The heat rates are lower, production costs much lower, O&M much lower, higher reliability. Those are great for our existing customers.
There's one of the charts in the presentation you had, in its presentation at length, grid investments provide customer benefits. This all looks like the Internet of Things that we keep hearing about. You guys are technology companies now.
Correct. And what we're talking about is the integrated energy network. So we start with advanced metering, where we get to know what's going on in the home, and then we're able to advance that with new technologies on the distribution side. So to date, we've been spending a lot of money on generation and transmission. We get into distribution close to your home. That's where battery storage can play a role. That's where distributed energy resources play a role. It very much is. And we've got renewables under construction in our service territory. In New Orleans, we've got 3 plants that we've already constructed in Mississippi, 1 in Arkansas that we're putting in place in the next couple of years. We're also going to RFPs for renewables in Louisiana, Arkansas, and New Orleans. So that's a big part of the business of the future, as is all of these technologies on the distribution grid.
Okay, I went to hear it's corporate governance conference this week, and the lead director from Home Depot said, listen, if you're in the boardroom now, you have to have someone involved with security, cybersecurity. Yep. I look at what you have, and I look at the technology, and I'm thinking the bad guys, they went in to try to, cause mayhem. What are you doing about cybersecurity?
Well, it's a very, very serious topic for us and the industry. So the industry in general, the utility industry works together better than any industry in the United States. So we've got a big advantage of that we share information on those sorts of things.
That's a good point.
And through the Edison Electric Institute and others. We have a chief security officer. We spend a lot of time on cybersecurity and physical security. The electric grid has a couple of things going for it. One, it's very redundant. So the first thing that happens if a bad guy takes out a line, other lines pick up the slack.
Okay.
Because we're prepared for that just every day.
Right.
Storms, branches, accidents, and the like. So we've got that going for us. Plus the ever-changing network makes it a little bit more difficult for them to figure out. But we're very, very focused on and very, very taking it very seriously to make sure that we're on top of cybersecurity.
And the last thing, you can't give me a date when it's all over, but obviously you already started increasing the dividend, so you're taking the posture. This may be a faster growing dividend than many of the other companies in your industry.
Mm-hmm. At the end of the day, with the growth that we're seeing in earnings, we should see a pretty fast growing dividend. Right now, we're growing the dividend to get into that payout ratio target that we've got of 65 to 75% of that utility segment earnings. But what we also need to remember is that we have a significant amount of invested capital in generation, transmission, and now in the distribution grid.
Excellent. Well, it's just been a great situation for our investors, and I love that. That's Leo Donato. He's the chairman and CEO of Entergy, ETR, one of our favorites we've been recommending for a very long time. Mad Money's back at the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.